the funny thing about Graham and Dodd is everybody talks about them and nobody's read them. There are two things about Graham and Dodd, who are great pioneers. Is first, they knew tiddly squat about credit analysis. They were just way off base. They had no, they were just plain. As for common stock analysis, they were a great pioneering effort, but you have to realize that the last edition of security analysis came out in 1962, before the great disclosure explosion. And the thing that Graham and Dodd really contributed in common analysis is, here are good things to look at, here are important caveats if you really don't know much about the company in which you're investing. Nowadays, after the disclosure revolution, which I think dates from the Securities Acts Amendments in 1964, it is very possible in most instances to know an awful lot about companies. The second thing about Graham and Dodd, given their thing, they were primarily involved with market risk. We, on the other hand, are very involved with investment risk. Notice in your prior question, I said we buy at big discounts from readily ascertainable net asset value. Believe it or not, that's an outgrowth of the Graham and Dodd thesis of buying nets at a discount, except that they really were in no position to figure out nets. They based that only on using a classified balance sheet by GAAP rules, where we do nets based more on common sense. As for example, if you have an asset, a Class A office building, financed with recourse finance, fully tenanted by creditworthy tenants, that for accounting purposes is classified as a fixed asset. But given such a building, you pick up the telephone and sell it, and it's really it's more current than Kmart's inventories, for example, which is classified as a current asset. But there was a lot of learning in Graham and Dodd. They pioneered value, but time to move on. One of the problems is after they wrote, the whole field of financial analysis was taken over by modern capital theorists, the efficient market and efficient portfolio. These are people who certainly know tiddly squat about anything, and there has been, almost since Graham and Dodd, very little scholarly contribution to the work that they pioneered, because all the economics and finance faculties moved on to something else.